Fed Jerome Powell did crush SoFi stock today, and he did flounder any potential bullish rally that we were going to see for today. Yes, he did talk earlier, and we need to go over exactly what he said because he kind of is sounding like Paul Volcker in the buck starts here speech that Paul Volcker gave in 1970 when he did rein in inflation by bringing the federal funds rate up to 20%. It's being referred to as Fed Jerome Powell's Paul Volcker moment. So we're going to go over exactly what he said, what the data is you guys need to know, and what the potential bullish and bearish catalysts are for SoFi stock as well as the broad markets heading into the future. So if you guys find value out of this video, hit the like button and subscribe to the channel, as well as let me know down below in the comment section what do you guys think about this information. Leave your input, leave your comments, leave your opinions. That is all very valuable to me, as well as get those free stocks down below in the description. And make sure to subscribe to the channel. Only a couple of you guys are subscribed. I know I said that twice, so that means you definitely got reminded a couple times here in this video. Nonetheless, let's get into it. So SoFi stock is currently down 3.6%. We're not quite to the end of trading, but we're getting close to the end. And I like to say this all the time here on this channel. Fintech and the Fed, they go hand in hand because fintech is very reliant on, especially SoFi, rates staying lower for longer. And rates historically have stayed low for a very long time. Really, since the 70s, rates have not got up to that, 10-20% level. The highest we had was before 08. Rates were 5%. But they've been lower than that ever since, usually staying at about that 2.5% range. So the Fed is definitely taking steps to become more aggressive on raising rates as well as reining in inflation. But SoFi stock, they do a lot more lending, even comparatively to something like PayPal or Square that is also in the fintech space, but they do less lending than SoFi. They do a lot of lending. So if rates start to go up, that makes lending less affordable for potential borrowers, and that should, in theory, affect SoFi, even though SoFi has been doing very well and it's unlikely to have a significant impact on business. Investors are still pricing that in as a potential risk factor for SoFi stock, and that is why SoFi does go down every time the Fed takes a more hawkish stance, and that's exactly what happened today. Let's take a look at some of the headlines that did come out. So Fed Powell said we got away from connecting inflation to money velocity. Powell, having a strong labor market has been big focus for me. In many ways, labor market hotter than before the pandemic. And then he says, if you want strong labor market, must have stable prices. And then he goes on to talk about the war, how that's a typical supply chain shock. And he says right here, these are really the keys that definitely move the markets a lot. And you can see this. Let's pull it up real quick. This was the Fed statement right here, the first one. And then this was the Fed talking the whole time. It was just pretty much straight down. He says, if we think it's appropriate to hike 50 basis points, we will. That is a 0.5% rate hike. And then he says, we may well conclude that we need to move more quickly. And then he said right after that, Powell was asked what would prevent a 50 basis point move in May. And then he says nothing. He says nothing. If they feel like they need to, if the data is there, nothing will stop that. No matter what happens around the world, no matter what happens domestically or foreignly, it doesn't matter. They're going to do it if the data says they need to do it. And this is really being said or quoted as the Paul Volcker moment. And if you look up what is the Paul Volcker moment, it says the term Volcker moment refers to the anti-inflation initiative led by former Federal Reserve Chairman Paul Volcker. When inflation was rampant in the late 1970s, Paul Volcker made the difficult decision to raise interest rates dramatically in an attempt to rein in inflation. So, Powell at the time actually chuckled to that when the lady, I don't know her name, that was asking Powell these questions and said that this is kind of like his, the puck starts here. I want to say stops here, but the puck starts here. The famous speech Paul Volcker made that basically rein in all of these interest rate hikes. She said this is kind of like your Volcker moment, and he kind of laughed to that, and the markets took a big hit on that because it's getting obvious right now that no matter what happens, Powell literally said, no matter what happens, if the data does not improve, we are going to raise more aggressively. He also did say that the balance sheet will take about 3 years to fully get down to where they want it to. And he wasn't specific as far as how low he wants the balance sheet to get, but he said really a little bit above that pre-pandemic level. And if you look at the balance sheet is about $9 trillion. Pre-pandemic, the balance sheet was at about $3.5 trillion. So that would imply the balance sheet being in between about $4 to $4.5 trillion. That would be about a $4 trillion decline in the balance sheet over 4 years. That's pretty wild. I mean, that's what, 36 months divided by 3 trillion, right? Okay, let's just go ahead and pull that up. If the calculator can even do 3 trillion divided by 36 months, yeah, that's reducing the balance sheet about $83 billion a month. That's a lot. That's definitely a lot. And that's the thing. People don't know what to expect when you're offloading the balance sheet like that. If you actually look, let's just go ahead and pull it up. Fed balance sheet, because you guys will learn a lot out of this, right? So the Fed balance sheet, the only time we really ever reduced the balance sheet after 08 was right here. From 2018 to 2019. What happened in the stock market from 2018 to 2019? Well, it was not pretty. Take a look right here. That's 2015. If we get in here, it looks so small comparatively to what we're seeing. But this, 2018 to 2019, that was these moments when the balance sheet was being reduced. So if you're talking about bringing the balance sheet down back to these levels of, 4.5 to even 6 trillion, call it, I mean, that's going to be a significant hit more than likely to the markets. I mean, they just don't know what to expect when you reduce trillions of dollars of liquidity from the stock market. And that's the biggest uncertainty right now. It might have little effect. It might have all the effect. We really don't know. So the balance sheet and the Fed, anytime they speak about the balance sheet, that's what causes a lot of that instability in the markets and makes markets sell off, because they just, it's uncertainty. And the markets, they hate bad news, but they hate uncertainty more than bad news. We could deal with bad news. We can't deal with the unknowns, the uncertainty behind what could potentially happen. So that's really the key what happened today. That's really the news that you guys need to know. It was a very hawkish stance on inflation, and basically sending us that signal that they will do whatever they have to do. If the data does not improve, which it's likely not going to, that they are going to hawk down on the economy. And we have that Fed meeting coming here pretty shortly, in about 6 weeks. To be specific, 6 weeks, 1 day, 23 hours, and 33 minutes from now, you will get the Fed rate decision, May 4th, the next FOMC meeting. And guess what happened today? The 0.5% rate hike projection went up dramatically. Now it's at 61.6%. Go ahead, take a look back at previous videos to look at this. And these numbers last week, this 0.5% rate hike probability was 30%, the high 20%. And then it hit 40%, but now after the Fed, it totally flip-flopped. And the Fed will always do what the markets are pricing in for the most part. So the markets are pricing in that 0.5% rate hike. I don't think it's fully digested by the markets yet exactly, what the federal funds rate is actually pricing in, that 0.5% rate hike, because we are now rallying. But it definitely looks like we are going to see that 0.5% rate hike, and that's not going to be pretty for the markets. So keep that in mind. There is more turbulence ahead, but SOFI stock right now is a huge buy, and I will go ahead and put my money where my mouth is. I'll go buy another 25 shares, because that's what we do here on this channel. We buy SOFI stock, we sit on it. We also trade other trades as well. And if you guys want more of the other trades that I make, or other stocks that I buy, let me know. We will incorporate that into these videos as well. Let me know down below in the comment section if you guys want more variety here, if you guys want to know what I'm doing. But nonetheless, SOFI stock is a hands down buy right now, and from like 99% of other analysts as well, SOFI stock is a clear buy. Now let's get into the specifics for the SoFi data, and we can see for the max pain, you're sitting at $9 by the end of this week. Again, the max pain is where the most amount of option holders lose the most amount of money. So market makers, the people that really dictate the market, hedge funds, institutions, whoever is selling you these calls or puts, that's where they make the most amount of money. So they do tend to like to pin the stock around that max pain price. It's not a guaranteed science, but it is saying $9 per share, and it does happen more times than not to get pinned around that max pain price. As far as the other economic data that is coming out this week, you have the Fed that speaks 2 more times, and also a ton of Fed speakers this week. Fed Williams, ECB Lane speech, that's the European Central Bank head, like the Powell of the ECB. So that's going to be interesting. That can move markets. Fed Mester, and then you just have a couple speakers every single day, and those statements are really going to move the markets up or down, but likely to the downside. We had Fed Bostic that did speak today, and he is typically the more dovish Fed speaker, and he was actually pretty hawkish. He was saying things are not really good. We need to consider raising rates much faster than we are already, and they're already going aggressive. They're already set out 7 rate hikes as the trajectory. So if you start to get more talk about even, possibly 9 or 10 rate hikes, you're talking about 2 or more double hikes this year, and that's definitely going to spook investors some more. So I do think there is a little bit more pain to come. Good thing for SoFi stock investors is that you've already experienced most of the pain. So I think a lot of that pain will come in the broad markets, in the larger stocks, not really in stocks that are already down, 70-80% from their highs. As far as the Ortex data is concerned, you're looking at 19.07% short interest of free float, 137.41 million shares that are sold short, cost bar max of 2.33%, and the utilization of 100%. You also do have the days cover at 3.16, so we're not really going to sit here and talk about a potential short squeeze here without any catalyst. The one catalyst that can cause and will cause a major market short squeeze across the board will be Russia and Ukraine, that war ending, hopefully on good terms. Hopefully nothing crazy happens. When that comes, you're going to be looking at a wildly green day in the markets, a lot of bullishness, as that will take out the thing that the markets hate the most, which is uncertainty. So yeah, that's going to be key. I don't know when that will happen. Obviously, I don't know Putin, so I can't tell you guys that, but I will tell you we will see a big rally when that eventually does happen. Now, as far as the option flow sentiment, you're looking at 100% positive order value for the day, 4 orders totaling $1.33 million. So it's definitely looking bullish on that aspect, and a lot of calls coming through. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9. Pretty much everything for the day so far has been bullish, has been calls, and some very large orders as well, like this June 17th 750 call for $267,000. Some very large orders that are definitely coming through right now. As far as a quick look at the technical analysis, as you guys already do know, we have to break above $10 before we even talking about going back to around that $14 price. We did get rejected off of that 2 days now in a row, and starting to come down, like I said, down about 3% right now, actually coming up towards the end of the day right now. But watch that $10 level. After that, 50-day moving average is at $11.55 per share, and then we can start talking about the $14 price range again. I think it's going to be a while before we get back up to, $15, $16, $17, $18, $19, $20 per share again, or especially those highs. That's why I'm kind of going slower here. I want a dollar cost average into this position. That's why I'm just going to buy 25 shares every day or every couple of days, really whenever I feel like it. There's no rush here. And build out a very large position in SoFi stock, larger than it already is, sitting at a $5,000 current market value, down about $2,500, down 33.5%, portfolio diversity of 11.56%. So I'm definitely betting on SoFi doing well into the future. The share count 525 in this portfolio. I got a lot more shares in other portfolios as well. My average cost of $14.38 per share. I do have SoFi $15 covered calls that I did sell to collect some additional premium. I'm up about 16.32% on those, up about $40, and I did sell these at $47 a piece, basically agreeing to sell my SoFi stock at $15 per share if we're above $15 per share by July, which does not look too probable given the current market we are in, with the Fed hawking down on the economy. And another side note here is that the Fed even said if a recession were to start, that would basically not derail their rate hike projections. They would still raise rates even if a recession hit. So a lot to take in there. Feel free to watch this video. Again, I know it was kind of sporadic. There was a lot to cover, and it was really hard to put this into a clear, precise, 10-15 minute long video. But hit the like button, subscribe to the channel if you guys do appreciate these videos, as well as get yourself those free stocks. Links down below in the description. So thank you guys for watching, and I will see you in the next one.